Good morning, and welcome to another edition of Macro Now, set to be released every Monday morning. Today is Monday, July 26th, 2021. My name is Alexander Turro, Senior Market Strategist here at RJO Futures, where we contextualize the rates of change of growth and inflation, not only here domestically, but globally as well, within the context of the prior week. So with that said, we'll start with the global currency market. You had the US dollar index have a counter trend bounce of 0.2% last week as it continues to signal bearish on a 90-day trend duration. On the other side of the US dollar, you had the euro correcting another minus 0.3% last week and is now teetering on a trend reversal from bullish to now neutral trend. Take a look at the Canadian versus the US dollar. That was continuous appreciation of 0.4% as it continues to signal bullish on a 90-day trend duration. And then you take a look at the British pound versus the US dollar. That came off minus 0.1% last week as it now has transitioned to bearish on a 90-day trend duration. Moving along now to commodities. The CRB index, the basket of 19 commodities, continued its inflation higher, up 1.9% last week to now plus 10.5% in the last 3 months as it continues to make and register new cycle highs here. Break that down further in the energy complex. You take a look at WTI oil. That inflated slightly after volatility. OVX had come off trend resistance and is now trading in the mid-30s. Take a look at natural gas. That appreciated 11% week over week to now plus 39.5% in the last 3 months. Touching on the softs and coffee, that inflated 17%. OJ 7%, and the agricultural sector, you take a look at oats, that appreciated 6% week over week. If you take a look at domestic equities, you had the S&P 500 inflate another 2.0% last week to now plus 5.5% the last 3 months, also registering an all-time high here. Breaking that down from a sector style and factor exposure perspective, you take a look at growth. Top 25% of sales growers were up 2.8% on the week. Take a look at quality, low debt, value stocks in the S&P were up 3.1%. And that's on the back of the NASDAQ was up, being up another 2.8% to another all-time close on a Friday, with the volatility component of the NASDAQ VXN collapsing downtown towards 19. In terms of global equities, you take a look at the Eurozone. The Eurozone has clearly been lagging the U.S. in terms of its recovery, but it will likely be accelerating on a rate of change basis as the U.S. comes into peak economic data prints, if you will. Take a look at July Eurozone PMIs. They came in at a 21-year high at 60.6, with the DAX, Sweden, Finland, all higher. Unlike Spain, which has been an absolute dog, that was down to minus 0.7% last week to now minus 4.8% in the last month. You take a look at Asia. China continues to be a laggard here. Taking a look at the Shanghai comp, that was down another minus 2.3% overnight and minus 3.9% in the last month. Hong Kong as well is down just yet another 4.1% in the overnight, now minus 10.6% in the last month. And you note on the Philippines, those were down. Equity market was down minus 2.3% in the overnight to now minus 8.3% in the last month. And just moving and touching on this upcoming week here, you do have some economic data prints and durable goods, consumer confidence, the Fed, as well as GDP, on top of about 180 companies set to report this week, with earnings growth of 118. Currently at a 498, we're reporting earnings growth of 119.33%. So with that, that's all we have for you today. If you have any questions or would like to follow up, please feel free to reach out to me directly. Otherwise, thank you for listening and keep your head up out there.